Hey guys, Shant here with a quick update to get you guys rolling for September 2021. Hope you guys all had a happy, healthy summer and enjoyed some times with your family and friends. We all deserved it. Um, I'm hoping that everybody's ready for the fall. So we got hot housing market ready to roll. We got kids back in school, sports starting. As much as I'm sad that summer's over, I'm really excited and looking forward to an amazing fall and winter. Really ramped up for the second half of the year. Our team's ready. We're ready. I'm ready. So we got a lot to cover, starting with the jobs report. So definitely a disappointing jobs report to start off in September. Definitely caught some people off guard. So here's what happened. Despite nearly 10 million job postings and rising wages, which you'd think would attract people to be filling these empty positions, the August employment report fell way short of expectations. So there were 700,000 jobs predicted to be filled, but only 235,000 of them were actually filled. So way lower. Clearly, the Delta variant and lack of workers is causing the economy to regress. Hoping that some of the employment benefits running out will cause some people to get motivated to fill some of these jobs, and hopefully some jobs come back as things continue to open up, as hopefully vaccines progress, etc. Normally, you would think that the bond market would like a disappointing jobs report. Typically, when jobs reports don't hit their numbers, rates tend to improve. The opposite happened this time, so which caught me off guard a little bit as well, caught the markets off guard. But the reason that rates actually got a little bit worse after this past Friday's jobs report was that there's a lot of inflation talk, earnings going up, which means scared the bond market, and rates ticked up a little bit on Friday. Nothing alarming. Rates are still amazing, which I'll get into in a second. The unemployment report unemployment rate dropped from 5.4 to 5.2 based on household surveys. The real unemployment rate's probably right around 5.8%. Again, unemployment rate dropping should have made the market rally, but there's that inflationary talk that's we were talking about a few months ago is starting to become real as wages are rising, to try to attract people into the job market. And obviously supply and demand, less workers, you need to pay more in order to, attract people to some of these jobs. So bottom line is inflation scares the market because it means that it eats away at fixed income returns. So that's what happened with the jobs report. Low number. Hopefully we see a better one in October. It's good for our economy, but that's what's going on right now. In terms of mortgage rates, still smoking hot. Rates are amazing. I'm blown away. It's not even 9 a.m. yet, and we've already seen I've locked in 3 refinances for previous clients of ours in the twos. So mortgage rates on refinances are in the high twos. On purchases are in the high twos. Any type of mortgage product with a 2 in front of it, when you're talking about a fixed rate mortgage, is amazing. Obviously, fixed rate mortgages on 15-year shorter term loans are in the low twos still. Amazing opportunity there. And then we're seeing adjustable rate mortgages at the best rates of all time. So rates are amazing. Definitely, if you haven't gotten your refinances in, please consider it. We're seeing a lot of clients eliminate PMI, take advantage of higher home prices, take advantage of lower rates. A lot of our clients that refinanced in 2020 are able to refinance again in 2021, taking advantage of the rates continuing to trend around. They're not going to be this low forever. Please get those in before it's not an opportunity for you anymore. Applications to purchase homes increased by 1% last week. They're down 16% from this time last year. However, there's more cash buyers than there were this time last year. So they're really only down about 8% when you factor in the cash buyers that are in the market. When you factor in that inventory is down 12% from last year, they're actually hanging in there quite well because, less homes for sale. You think ultimately there's less people looking. Some people take themselves out of the market because they can't find something. Obviously, when there's more inventory, typically there's more applications because there's more buyers because they have something to buy. So hopefully as inventory increases this fall, we'll see applications soar. You combine increasing inventory with really super hot rates, I think we're going to see really strong application data in the mortgage world for the second half of 2021. Refinances were down only 4% last week and are down only 2% from this time last year. Last year, we're in a full-fledged refi boom. This year, we're in a full-fledged refi boom. So rates are amazing. I think we're going to see strong refinance activity for the second half of this year, again, because rates are so great and you're seeing home appreciation big time. So what does people that had PMI can get rid of it. We're seeing a lot of clients cash out to do some debt consolidation, a lot of home improvement projects out there. You drive around these neighborhoods, there's construction and work going on everywhere. Getting a contractor, they're all 5-6 months out because the demand is so high for everybody renovating their houses. doing home improvements, and just readjusting their way of living based on what has happened over the last year and a half and what they need from their houses. And then on top of that, earnings are higher and rates are low. So you can borrow the money cheaper, and hopefully you're making more money so you can afford this project. All right. So from our good friends over at MBS Highway, thank you guys for all your information always. You know, they gave us a little information on housing data breakdown. So the media obviously likes to draw attention to the fact that home prices are 41% higher than they were during the last peak in 2006, right? That was so long ago. You may even hear some outlets calling for a housing bubble, right? Due to comparisons and the surge in demand and whatnot, and obviously surge in home values. But you can't look at just housing prices, right? When you're comparing a home price today to that of a house 15 years ago, right? So here's why. People buy homes based on mortgage payment, right? So you always must factor in mortgage rates, right? And household income. So two big data points here. In 2006, the average 30-year fixed rate was above 6%, right? We're under 3% now. So it's the borrowing cost is half of what it was, 15 years ago. Household income has increased 55%, right? That's massive. So cheaper borrowing costs, much higher income coming into the households. Of course, home values are going up, and there's, much lower inventory. There wasn't a lack of, there wasn't a huge lack of inventory back in 2006. There was a ton of houses in the market. And then on top of that, truly anybody could get a mortgage back then. Whereas now getting a mortgage, it's more compliant than ever, more strict than ever, and they're performing better than ever. So overall, totally different. The people sitting in these homes that have bought homes over the last couple of years truly can afford them. We're not maxing out debt to income ratios. We're not maxing out loan to values. People are making strong down payments. They're competing, a lot of cash buyers. So totally different market than 2006, in my opinion. So I don't think there's a housing bubble coming, in my opinion, based on all this information. I think you'll see a slowdown in appreciation, but it's still going to continue to appreciate. I think the U.S. housing market is going to stay strong for a very, very long time. And then we got some tips for listing agents out there. What do buyers want to see? So according to a new report by real estate marketing firm boxbrownie.com, there are a few things that new buyers want to see from listings. Okay, here are what the key findings were. 89% of prospective home buyers want to see high quality listing photos, right? 67% of buyers want floor plans, and 58% would like a virtual tour. So if you're a listing agent, definitely keep that in mind. If you're a buyer, if there's other stuff you want to see, definitely feel free to direct message us. Let us know. We'll communicate that with our agents out there. Ultimately, guys, covered a lot of important data. Here's a few more things. It's the fall, right? I've been saying that the fall is going to be hot because of low rates. Inventory is going to increase. There's a lot of pent up demand. A lot of people got boxed out of the market earlier this year because it was so intense. So as a buyer, at the beginning of the fall market, we should be thinking is how can I get prepared and how can I get informed so I can get myself ready to buy a house and act fast? The market's going to still continue to move fast. One of the things we're doing, we're moving faster than anyone out there. We can outspeed all our competition in terms of application to closing, inquiry to pre-approval. But one of the big separators for us has been our pre-commitment program. And what that means is that we're fully underwriting our clients upfront, collecting all your documentation, all the work you would do typically after you have an offer accepted. We're doing it in advance. And what that does is that gives certainty to sellers, that gives certainty to sellers agents, and it shows sellers and sellers agents that you're organized. It eliminates a lot of the risk of things falling apart because you can say, I've already gone through the rigorous underwriting process and they've given me this commitment letter. All that I have left to do is maybe get an appraisal, maybe we get an appraisal waiver, and my attorney needs to do title work, which they would have to do, or title company needs to do title work. So, the amount of confidence it gives our buyers is obviously huge as well. It also allows you to start just focusing on, buying the house and all the things you need to do and not worrying about the mortgage all the way up until the closing date. And it allows you to close fast. So everybody that's got a pre-commitment from us, no matter what kind of mortgage you have, we are committed to closing in 21 days or less. And that also grabs the attention of the sellers and it makes you compete with all those cash buyers out there. And it puts you a leg above all the other people with mortgages out there with either pre-qualification letters or pre-approvals. Our conversion on our pre-commitment letters has massively increased, and we've gotten feedback from listing agents and buyers agents. That's the reason they got the offer accepted. So we can get a pre-commitment done for you generally within 2 weeks of you actually having your pre-approval, because we got to go through that underwriting process. We'd love to do it for you. There's no cost, there's no obligation. It's purely to the benefit of the buyer, the buyer's agent, and obviously the seller and the seller's agent, because it eliminates risk, increases speed, increases certainty, increases confidence. So overall, win-win-win. So take advantage of that. Direct message us, email me, get in touch. We'd love to get that going for you. Lastly, two more things. I wanted to give you guys something, just some little tips separate from housing, mortgage, all that kind of stuff. So did some summer reading this year. People always ask me, hey, what are you reading? I love hearing what other people are reading. So if you're reading some great books, I'm all for it. We're always trying to figure out ways to get better. 4 really impactful books I read this summer, getting ready for the fall market, just always looking to improve our team, our business, myself, whatever. So here they are. The 5 a.m. Club, awesome. Really helped me dial in my morning routine. My morning routine to me is one of my secrets to my success and just feeling like I'm in a good spot. So the 5 a.m. Club, awesome read, easy read, super impactful in terms of just buttoning things up. So highly recommended. 2 other great books I read, Relentless and Winning by Tim Grover. He was the coach and trainer for Kobe Bryant, Michael Jordan, and many other elite level athletes, as well as CEOs and business people, and just great mindset stuff about winning and succeeding and success, and just giving you the tools necessary to kind of get your mind right and thinking the way to win. So highly recommend those 2 books. I loved them. Super easy reads as well. And what I'm reading right now, really great book. It's called Legacy. It's about the All Blacks. It's a rugby team from New Zealand. I know nothing about rugby or New Zealand, but this book has been amazing so far. I'm about halfway through. Just great. I actually was listening to 2 podcasts. Dabo Sweeney, national championship coach from Clemson, recommended it. And then Greg Carvel, the UMass national championship hockey coach, took them from 0 to national championship 2 years in a row, lost one, won one, but amazing turnout story. Both credit this book in terms of teamwork, and just so much of it applies to business advice, no matter what kind of team you're running, whether it's a sports team, business, etc. Just a really great book, fun read, easy. So highly recommend those 4 books: 5 a.m. Club, Relentless, Winning, and Legacy. So hope you guys are off to an awesome start to September. Good luck with back to school. Good luck with back to business. Good luck with getting into this housing market, refinancing, whatever. But I hope you guys have an amazing September. And if we can ever help you guys in any way, shape, or form, please just reach out to us, direct message, text, email, whatever. We're easy to get a hold of. Thanks, guys.